Hey, welcome to Dallas Stock Talk, where I talk about topics relating to investing in finance, but more specifically, the stock market. In this video, I'll be going over Google stock. I'll be going over whether I think Google is a buy after the stock split. But before we get started, make sure you smash the like button because it helps the YouTube algorithm and helps me promote content as my videos reach a broader audience. So in this video, it's kind of like a stock analysis, but I'm going to be a lot more casual as far as my talking points. I'll be going over how Google make money, what I think about Google, technical indicators, earnings, just key things that you would like to know as far as whether or not Google is a good investment. And also towards later on towards the end, I'll tell you my price points where I think Google is a good buy. Now, like I said, I'll create timestamps so you can skip around to different particular parts if you want to see the finance part, if you want to see the news part, the stock split part. So I have timestamps so you can skip around to your particular liking. So let's go. So Google right now, as we can see, is $112 a share. They recently had a stock split. If you're not really sure what a stock split is, it just means they just issue more shares. So at one time, Google was about $2,000 a share. Actually, let me just kind of pull that up so you can kind of see what a stock split is. It just makes each individual share cheaper. The fundamentals of the business remains the same. So I'll give you an example. So before I want to say before Friday, June 18th or 19th, Google was about $2,200 a share. So if they're doing a 20-to-1 stock split, which means there'll be 20 more Google shares issued out per one. So now Google would be, as of Friday, like I said, would be 110. So pretty much whatever the share price was at the particular time, you would divide it by 20, and that's how you got the new share price. It's cheaper to buy, but as far as the amount that you would get, it would be relatively the same. So I just kind of always like to make people aware of that. So just because the stock is $100 a share versus $2,000 a share, the likelihood of it going up the same or it really doesn't necessarily matter when we're talking about the market cap, the profit, the earnings, and all that is the same. So now let's jump into how Google make money before I go into any more in-depth thing about talking about anything. So, and also, by the way, I will go over Google's earnings report as well briefly. So if you're kind of new, it's always good to understand how Google makes money. So I'll show you a chart to break down their streams of income from revenue. But first, I'll just go over, this is from Seeking Alpha, 6 ways Google can make money. I just kind of like going over this. And by the way, if you're new, make sure you turn on that notification bell and subscribe to my channel. If you also want to see any type of other finance news or companies, drop it in the comments below. But so this is pretty much, Google makes most of their money from ads. So what end up happening is they have companies, since a lot of people use Google, they have companies that will pay to have ads on Google so that they can end up getting customers and customers to buy things and stuff like that. So most of Google money comes from the ad business. So they charge companies to be able to put ads on that particular platform to attract customers. That's pretty much how the business model. Like I said, Google Ads. Google makes 80% of its current revenue from Google Ads. So just know that the ads business is a key component. That's the bread and butter when you're looking at Google as far as how they're going to make money right now. 80% of it is Google Ads. The next one, I think this has the strongest, which will potentially end up changing as far as the ads, Google Cloud. So pretty much they charge you for storage. I think they charge in this one, I believe 12 cents per gigabyte. You gotta remember there's millions, billions of people using Google and things of that nature. So Google Cloud, this one could be pretty big. Also, actually, let me turn my phone down. It's always a distraction when I make videos like this. Also, we have the hardware: laptops, tablets, smartphones, earplugs. I'm not exactly sure how that will kind of do over the long run. Google Play Store, of course, and YouTube premium content like subscriptions, and also they included YouTube TV. So these are ways that they can particularly make money, but the bread and butter is Google Ads. Now, since I went over that, let me show you a picture so you can get an idea. So this is a breakdown from 2020. So the percentages probably slightly changed, but not that much. So from the ads from Gmail, Google Maps, and Google's 57%. Then from Google Cloud, that's what the storage part is, 7%. And then as far as Google Ad Manager, that's, you can kind of group that with ads as well. They're just kind of breaking it down. YouTube, that's ads as well. And then of course you have others, and they had one that's other bets, but like smaller startups and stuff like that, but that's less than 1%. So like I said, this is kind of just to give you guys an idea of the makeup. So as far as percentage wise, where's their streams of incomes coming from, I think this does fairly well. Let me see, I think I have one more, 2000 maybe 19, and they just kind of break it down slightly different. They have Google Others. I would consider that like as hardware or other services or something like that. The other bets, what I was talking about, self-driving car, net smart home products, and you have smaller drone delivery, much smaller ones, 0.4. Advertisements, Google Ads, 14%. Ads, this is, like I said, all of this is pretty much ads across the board. But like I said, I just wanted to, cover that for you guys. Okay, I actually had to go over the financials. I actually didn't cover that as far as how much money they actually made. So, in revenue for 2018, we had 136 billion. 2019, 161, 182, and 256 billion dollars. From earnings, you go from 2018, which from 30 to already 2021, which is 76. So we've seen 30, 34, 40 to 76 billion. So I definitely just wanted to kind of go over that. Let's talk about recent news. As everyone knows, the economy has been slowing down, and the companies, even a lot of big tech firms, are definitely slowing higher. We've seen a slowdown from Apple's starting to, a lot of times as far as layoffs, we've seen Shopify, a lot of crypto brokerages like Voyager, Coinbase, they're laying off a lot of people. But I've noticed a lot of big tech are kind of slowing their hiring or putting on like a higher freeze, simply because the economy is definitely slowing down. And also you gotta remember, so Google is an ad business. So as budgets and people spend less, a lot of businesses will spend less on ads. So it's always good to kind of know the macro environment when you also looking at these particular companies as well. So just keep that in mind. So just knowing, like, booming economies, more people will end up spending money on ads. But if we go into a downturn, like a recession, we can definitely see ad dollar amounts going down. Like for me, I normally like to bet on big businesses. Like I said, big businesses, great companies at very attractive prices relative to what the company is doing. So like anytime I see Google, Amazon, Facebook, I'm always looking at that. Talk about their earnings a little bit. Their earnings just came out yesterday. Yeah, so their earnings came out the other day. Their earnings, as far as revenue, and I believe earnings and revenue was below expectations, just a little bit below, not that much, but just a little bit below expectations. So I really wouldn't worry about that too much. I'm a long-term investor, like I said. Earnings and revenue slightly, just slightly. Well, earnings was a little lower, about 6%. That's somewhat significant, but revenue was not that much. It was kind of close. So let's also pull up the earnings. So as you can see, earnings, they compare quarter to quarter, year over year growth. That's what they end up doing. quarter-to-quarter, year-over-year growth. So as you can see from the change from year over year, for 2021 was 62, for 2022 13%. As you can see, the operating margin slightly decreased. Income also slightly decreased, as we've seen from the earnings estimate. And I like how they do the breakdown. And by the way, traffic acquisition cost, that's very important for Google. As we can see, for Google Ads, slightly increase. Google Network slightly increase. So the Google advertisements up a bit. That's always good to see. Google Others, that would be like hardware, laptops and tablets and stuff like that. That dropped a little bit. Google Services, well, that's the total. So Google Cloud, we've seen revenue increased a bit. Always want to see that. Other bets, let's just say about the same. And as far as hedge gains, they look like they gained a little bit there. But as far as operating net income, so there's revenue and there's net income. So net income is after you deduct all the other costs. Revenue sales is just the total amount that's end up selling. So as you can see from Google Cloud and other bets, they're losing money in the other one. But that's kind of how it always was. And then eventually these Google Cloud won't be losing money and actually be gaining money. So that's, future growth. Just kind of keep that in mind. Simply Wall Street, as we can see, the Google competitors, Apple, Microsoft. I think everyone already know Google competitors. And a company like Google, this is the thing. I would say their competitive advantage is their recognition. A lot of times when people think of the internet, they associate internet and Google as the same thing. Whenever you have someone, they don't know anything or they don't know something, what is the first thing you say? Google it. You don't say Yahoo it. You don't say Bing it. You say Google it. It's just that brand that, okay, if I need information, if I'm looking for something, use Google. It works. Nothing's wrong with it. And that particular things like that, it gives them what you consider brand recognition. Now, as you can see, overall, Google is down 20% from year to date. The market is down 16 and the industry is down 37. So considering the industry is down 37, 20% is not that bad. So as we look at as far as the metrics, as far as PE ratios, this is one way you can determine whether a stock fundamentally is overvalued or undervalued. Google's at a P at 18. Historically, that is much lower than usual. But you gotta remember, Google, as far as it's already a big company, so them growing like they did before in the past is probably unlikely. And as far as the price to sales is 5. I'm just kind of letting you guys know, the lower these numbers are, the more attractive it is as far as evaluation. All right, so we can break down the revenue. $270 billion of revenue, cost of revenue $116 billion, gross profit $153, and the other expenses $79 billion, which led an earnings of $74.5 billion. The good thing about it, the gross profit 56%. That's a nice gross profit, and net profit margin 27%. I would definitely say that's a good margin as well. Now let's scroll down so we can see it shows, and these are other big corporations like Amazon, Apple, Google, Meta. So as far as the PE, remember I was telling you, keep in mind that from a value perspective, the lower the better deal you will be getting as far as value for the company. But on this side, they also have the earnings growth. So just know that the faster the company or is expected to grow, the more money investors are willing to pay. So you have to keep an eye on both of them. The earnings forecasted growth, and this is by estimates, analysts as well, and as far as how much money they're making now. Now, so as we can see, Google is here, but as we can see, the forecast annual earnings growth is projected to be 13%. And I believe this is from Simply Wall Street. This is over the next 1 to 3 years. Just you got to keep in mind because some people looking at 5 years, some people looking at 10 years, but for this one, it's 1 to 3 years. So as we can see, Google, as far as Facebook and Google, they have about the same forecast earnings growth, but Facebook is trading at a PE of 11 and Google is 18. Now, I will say, but compared to Microsoft and Apple, I think Google is a much better buy. As far as just looking at from PE earnings perspective, and if you're looking at the earnings growth and you're looking at the POE ratio, it appears that Google is a better buy than Microsoft and Apple once you consider. I kind of threw Amazon out because their earnings forecast growth is much higher. So I like to compare apples with apples. But I'm sorry, Microsoft is 12. But still, Google has, as far as a value perspective, is a higher growth than Microsoft and Apple. So the only one that's more attractive than Google is Facebook. But I think Google is way more profound in than Facebook. Now, if we look at forward PE, even like I said, even when you're looking at forward PE, same way as well. So from a value perspective, Google, I definitely like that in this particular situation. Now let's look at what they consider a fair PE. So Google is a value based off a PE ratio of 18 compared to estimates fair price to earnings ratio of 38. That 38 to me, I would disagree with this part. I think maybe 25 would be better, but I'm right now it's at 18 anyway. So now this is based off of the discounted cash flow. This is the discounted cash flow. This is one of the ways you can value a business. So you project what you think the company will do in the next 5 to 10 years or 5 years, and then you discount it back based off of the growth rate that you expect it to be. And then when they discount it back, according to what estimates had of their numbers, they're saying it's undervalued from a discounted cash flow perspective. You got to keep in mind whenever people do these discounted cash flow, you have to pay attention to the assumptions that they're particularly making. Anytime maybe Google under $100, to me, 100 or less, to me, it's just buy. Right now, the price is okay, but given the situation, like I said, things could, if the overall market can continue to go down, it's been on a downward trend. The economy slowing down and stuff, I'm a little bit more picky. They're saying the average price target for the next, I believe, 12 months would be 158, an increase of 33%. Forecast, I wouldn't put too much emphasis on, but it's just good to get a consensus as what analysts or everyone else is thinking, so you can just kind of keep that with a grain of salt. For the annual earnings increase is projected to be 13%, and the earnings revenue is 12. The industry is higher, but you have to remember Google is such a big company, they can only grow but so much. But it is growing, like I said earlier, at a much faster rate than the market. From a financial standpoint, financials is just remarkable. The assets is short term and long term just perfect. They have a lot of cash on hand. We talked about, like I said, this company has 1 in 33 billion of cash. Now, I just normally try to look at things from all different ways. I'm not a particular trader, but I do occasionally look at it because you definitely have to realize that a lot of people do trade. So sometimes when I'm looking at maybe an entry point, I may just look at the particular charts in general. Now, looking at the particular charts as far as price points in this one, I don't really see anything significant from a long-term period where we've seen like a range of where Google was end up trading before as far as historic price ranges from the last since 2017. And by the way, I'm just kind of just drawing these really roughly. It was in that particular range for some time, and then 2020 is definitely when it broke out. So we can see from 40 to about 65, that's where the stock price happened in a good while. Will it come down to that? Probably not. So that's what I'm saying from an investor perspective. Realistically, I don't think it will ever get to those ranges again. During the pandemic, it got to about $50. To me, as far as maybe a price target, I really like anything under $100. Of course, the lower it becomes, the more I would end up buying. So, like I said, if you had the concept of buying the dip, after we already did the evaluation as far as assuming the discounted cash flow was at 105 or something like that, which you could end up saying maybe a broad point of 100, then maybe 86, then maybe 72, and then in this particular range. I'm just kind of giving you like idea from this video. I look at this channel a lot or something. It's like everything money, one of their particular tools that they particularly have of how you can kind of value a stock. Now, I told you I use different sources to analyze companies. I have my own methods, but a lot of times my own methods and their methods is pretty identical. So it's just kind of like to be able to analyze a lot more companies. I'll end up using a lot of tool where you can, based off of, like I said, these assumptions and your desire and your return, it will give you price points. Now, as far as revenue growth, when we seen this is historically. Now you have to remember Google is always big, so as time goes on, they're not going to be able to grow at that higher rate. Also, you gotta remember the economy is kind of slowing down a little bit. So I'm looking at it from a 5-year time frame, right? So I'm going to say the high, I would say 15. Remember, the more conservative you have, of course, the lower the price points for you to buy is going to be. But I'm going to go with, I'll probably say 5 and 8 and 15. Far as profit, kind of this video in 2020, so I don't think that's going to be that for. We'll just say 23 for that one as well. For free cash flow, I'm basing these off of historic P/E ratio. I'll probably go with. Now, like I said, all of these are going to be subjective flow. I'll just keep that all. Rate of return, I'm going 12%. Say the average market is about 10%. So I go 12%. We'll look at the stock analyzer tool. And then on the low side, as you're looking at just the multiples, 66 on the low side, 175 on the high side. Probably just mainly would take the median, which from like 101 to 96. So that's, to me, that's like the, I guess you're looking at a value investor perspective. To me, that this is I would say this is a sweet range. Now, of course, if the market keep going lower and lower and lower like that, Google price can drop, much lower. Depends on the way the overall market goes. That's what my assessment of Google is. I think it's a great company. But a lot of times when people associate the internet with Google, be like, oh, sometimes they associate the same thing. They don't realize just Google is a particular browser. So that's what I was saying. If Google drops under $100, I probably still would be picking up some. But right now, my overall strategy is just dollar cost average into broader indexes. But that concludes this video. Let me know what you think about Google. If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to my channel.